11 months of lower milk production, yet we're making it up in protein and fat. The perfect storm that's brewing in the grain market, and how to get a grip on your true profitability by managing your margins. That's what we're covering today here on the Uplevel Dairy Podcast. I'm your host, Peggy Coffeen, and it's my mission to bring you the conversations that will uplevel your skill set and your mindset so you can be a top performer in the dairy farming business. And today we are joined by Curtis Bosma from HighGround Dairy for the July monthly market insights. This episode is brought to you by HighGround Dairy. HighGround Dairy offers comprehensive insurance solutions from dairy market experts, ensuring your operation makes informed decisions to navigate market volatility. Find out how the markets are moving and how it could impact your bottom line in our show notes. Information in this podcast is for educational purposes and is not a solicitation to buy or sell commodities. Opinions expressed are current opinions as of July 18th, 2024 at 12 p.m. Central Time and only represent the views of the speaker and not those of HighGround Dairy Trading unless otherwise expressly noted. Let's hear this July monthly market insights report from Curtis Bosma. Curtis, welcome back to the Uplevel Dairy Podcast for a monthly market update from HighGround Dairy. And you're joining us today to give us the insights of what you've seen going on throughout the different commodities in the month of July so far. And so, Curtis, what are you seeing in the dairy markets in particular right now?
Looking at it right now, I'm back. I know last month we talked, I was in Chicago, which was quite nice from a weather perspective, especially now returning back to the Central Valley of California, where we've had heat in excess of 115 degrees. I think we've been over 100 degrees now, almost consistently every day for the last, I want to say 15 or so days. So definitely that's been a hot topic, pun very much intended, for dairy producers as we're kind of going through this season right now. When we look at the data, we do have data for U.S. milk production through May, and that's the May data showed that we were lower year over year on the overall U.S. That's the 11th consecutive month of year over year declines. I should note though, when you look at the data and in the USDA milk production report, they just list out the gross pounds of milk overall in the U.S. as well as in the individual states. But in the ag prices report, they do list out the butterfat content that's in milk on a national average. And when you look at the butterfat, and we kind of have some different sources that we can estimate protein percentage off of as well. But if you apply those to the overall U.S. milk production, we're actually up year over year still. So even though gross pounds of milk being produced are down, we have been much stronger when it comes to component production. This has obviously been driven by what we saw in recent years from a margin perspective. When we look at the year-to-date dairy cow slaughter data, we are down 14.4% versus last year across the whole U.S. So that's pretty significant. I think that's kind of calling out a couple different reasons there. Obviously, we all know at this point that replacement heifers are very expensive. So I think people are holding on to those cows as long as they can, which has kind of plummeted those cull rates on farm. We look specifically at like the fluid milk situation in the countryside. So Midwest spot milk is kind of the one that everybody likes to point to. We've been recently trading at a premium between 50 cents to $1 a hundredweight, which seasonally it's normal this time of year, second half of the year, to start seeing some premiums in that Midwest spot milk basis to class 3. But if we recall last year in the first half of 2023, we were trading at very steep discounts. We were $6 to $8 under class 3 value. That allowed the processors to essentially pick up a lot of discounted loads of milk, quickly convert that into CME eligible cheese that could be sold at the CME spot market, which brought prices as low as $1.30 a pound for cheese in Q2 of 2023, which translated to like a class 3 price slightly below $14 a hundredweight. We're definitely not seeing that right now. We've kind of held on to some decent values for the first half of this year, which has kind of put that milk and cheese thing in a little bit of a tighter situation thus far. Transitioning into kind of the cheese market here a little bit, if we're looking at recent cheese prices here, we did briefly touch sort of the $2 level there at the CME spot market, which was a pretty swift recovery from where things were at earlier in this year. We've kind of steadily been holding in this $1.85 to $1.95 range. A lot of that has been just the amount of less cheddar. Kind of talked about the discounted milk situation through this year. So we've seen a lot less cheddar production through the first half of this year than we saw in 2023. If we look total at year-to-date cheddar production, specifically as a cheese variety, we're down, this is data going through May, but we're down 8.2% compared to where we were last year. But if you look at the other types of varieties of cheese, those have been up significantly. If we recall, like the first half of this year, cheese prices were lower, which allowed for manufacturers to make different varieties. But as we've been moving up to some of these higher price points, we saw it when we got to $2, we see a lot more apprehension from the buy side. So I think at this point, a lot of cheese buyers have shifted more to a hand-to-mouth approach. They're not necessarily going as far out on their contracts, which is why we're seeing a lot of these inverted forward curves where we have front month prices at high levels, but then as you look further out, it seems that prices are kind of stepping lower here a little bit. Another demand source for the cheese market has been exports. So we've had a pretty good export year thus far. I know we've talked about that in previous months, but that continues to be a pretty decent trend. Mexico has been a very good destination for cheese thus far in 2024.
So, Curtis, you just mentioned the dairy market, the cheese market. What's been going on with butter in the last month?
Typically, when you look at any commodity that's trading at either an extremely high price level or low price level, you're going to tend to see a lot of volatility in the pricing of that commodity. This year, butter has been a very atypical commodity. We've seen prices at historically very high levels, but the butter market has remained very orderly. It's just been staying in place. We've had a pretty steady march up to the current CME spot price. We're sitting at about $3.13 a pound as of today. That is pretty significant when you compare to a lot of historical averages. Now, when we saw last year, we got to some of these super high price levels, but you got to remember that we also spent part of the year at $2.50 a pound. So we had big swings up and down, whereas this year we've been kind of very much holding steady here. And talking with people throughout the supply chain and looking at some of the data that's out there, retail sales for butter have been strong, kind of regardless of price level this year. So I think that's why we're seeing a lot of that firmness in this butter market. But expectations are that we're going to continue to see this sort of support hold steady at least through early November. That's kind of when we seasonally hit our peak. And then towards the tail of the year, after holiday purchases have been made, we may see a little bit of a reset there. We'll, of course, be monitoring that as we approach November to see from a fundamental standpoint where things are at. As much as we'd like to think this thing will keep marching higher forever, we are going to eventually start to run into some barriers and some hurdles when it comes to demand.
And what's going on with our powders in the powders market?
So kind of a tale of two stories here. If we look at the non-fat dry milk, skim milk powder market, it's been relatively lackluster so far this year. A lot of that has been due to the decrease in export potential. Our year-to-date exports through May have been down almost 12% versus the same period in 2023. Again, that's data going through May. This is not great news for 2024, considering we were down. We're comparing this to 2023. 2023 was also down relative to 2022, which was also down relative to 2021. So when we zoom way out, we can kind of see that we've been struggling in recent years from an export perspective. Looking at the current political environment, there's a lot of people kind of expecting to see potential for China to come in and make some large purchases towards the end of this year. If we are to have an administration change in the US, that could come to be for certain commodities. But China has made a lot of investments in bolstering their domestic production for dairy. And it doesn't seem that non-fat dry milk or skim milk powder may be as aggressive of a purchased commodity, at least as it looks from our perspective today. And then shifting over to the whey side of things, the whey market has actually been sneakily climbing higher along with cheese. A lot of that has been due to the demand coming from the higher protein whey derivatives. That's been taking away from some of that commodity style dry whey that we're ultimately priced off of. And it's quite interesting what they have been able to make with different product mixes with those sort of high protein whey derivatives. I was actually in Costco last week, and I saw there's a whey protein isolate lemonade mix that you can just mix with water. So of course I had to buy it to try it. I tell you what, it tastes just like lemonade, and one scoop was 20 grams of protein. So kind of impressive what they're able to do with that.
You've mentioned here, as you've really walked us through the movements in the dairy market, or should I say lack of strong movements, but one thing you touched on over and over again is the impact of exports. And we're in an election year. We've had a lot of upheaval in our country as of recent. What's your gut telling you on that situation and what we could anticipate in the next few months?
Yeah, Peggy, that's an excellent question. And I tell you what, if you would have tasked Hollywood's best writers to write a script about the most dramatic series of events that could unfold in the 2024 election cycle, I don't think they would have been able to draft what's actually happened here in the last couple of weeks. It's been kind of a crazy one here. I always reference back to the Vegas betting odds because I ultimately think if people are putting money on the line, it gives you a better chance of the probability of the outcome. I know as it stands today, it looks like we're leaning pretty heavily towards a potential Trump-Vance presidency come November. A lot can change. We're still several months away from the actual election, so we'll have to stay tuned for our next episode of American Politics that's bound to show up. But if we are to see that administration shift, there is a high likelihood we're going to see more of a trade protectionism take place a little bit. I think there's a lot of interest in bringing back manufacturing jobs to the U.S., which could have some good long-term implications. But when you look at the commodity markets, especially those commodities that are reliant upon an export market for key incremental demand, that is something that's going to be a bit of a challenge for those commodity markets if we are to start imposing tariffs, get involved in any trade wars with countries that we are benefiting trade from. One thing that we do have to our advantage as specifically the dairy industry is that our largest export partner is our neighbor to the south in Mexico, which seems like if we are to go into more of a protectionism thing, because of some of the free trade agreements that exist within North America, we may be able to have a little bit of a better runway than other commodities may have in a more protectionist environment. But that is yet to be seen. We'll definitely have to be monitoring those situations as things unfold.
Well, so stay tuned for that. And as you mentioned, other commodities. What's been going on in the grain market, Curtis? Because that is where we've seen a lot more movement. Give us the rundown of what you've been observing and what our dairy producers need to know and should be paying attention to there.
I'll tell you what, I tried to talk about the dairy markets and stay as excited as possible. But ultimately, the grain markets this last month has been where all the action's been at. So if we remember, just to kind of frame where things are at today versus historically, last year we had relatively dry conditions across most of the Corn Belt, which kind of like had this continuous sense of concern when it came to how much production was going to be, where ending stocks were going to play out at. Ultimately, it ended up being a pretty decent crop, but throughout the year, because of all that stress on the crop, prices stayed at relatively elevated levels. Now, this year has been much different. There has been pretty consistent and heavy storms across much of the Midwest. If we look at the month of June from a precipitation rank perspective, if you drew a line basically from Sioux Falls to Minneapolis and kind of scooped in some of that western Wisconsin as well, a lot of those areas have either experienced the wettest or near the wettest June on record. So that has been a concern for farmers with some of the first cuttings of hay here for dairy producers, or whether we're talking about corn or soybeans in those regions as well. So there are some flooded fields out there. To what extent is still kind of yet to be seen. But the interesting thing is that we've paired a lot of this additional precipitation with a heat wave. So it's been wet, it's been warm, and thus far that has led the USDA to keep that targeted yield number at 181 bushels for corn, which is still being projected as of the July WASDE report, which would be an all-time record. So rain makes grain. There's still maybe some flooded areas out there that are going to struggle. But overall, until the USDA moves that number, we're not going to see much of a change there. And then looking at the crop ratings from like earlier this week in the crop progress report, we have both the corn and soybean crops. Their good to excellent rating is sitting at 68%, which you look at recent years is a pretty good rating for this time. That may change as we figure out more is flooded or more has dried out, given some time here. And I also think it's notable because we've seen this big price action where now, old crop corn has fallen below $4 a bushel. New crop is kind of hovering right above $4 a bushel. Now, what has been kind of the aggressive force there that's been really pushing those markets lower? Well, when we look at the commitment of traders data that's released to us that shows the different large position holders, as of July 9th, money managers, which are typically the largest position holders in those types of markets, they've officially established the largest short position in both the corn and soybean futures markets ever. Seasonally, there has been a trend to cover those positions to a certain extent closer to harvest. But as we're looking at those positions now, that is definitely a large reason why we're seeing these suppressed prices. And then if we look at the July WASDE report, there was some slight adjustments. I did mention that USDA did maintain that yield at 181 bushels for corn. The new crop ending stocks are still over 2 billion bushels, though. And ultimately, that's going to be kind of our guiding beacon of where prices ought to be. So as long as that stays above 2 billion bushels and we come in with this large crop, then we're going to continue to see prices kind of struggle to gain any upward momentum.
So that's what's been going on in the grain markets. What about the cattle market? What's been going on there, Curtis?
So also some excitement there in the cattle market. So if we look at live cattle, that's kind of risen back to the highest level since March. We've had a little bit of a reset there, but we're still holding on to some support around that $180 per hundredweight level. Feeder cattle futures have actually pushed to record levels this year, but recently they've been kind of failing to get out of this 250 to 265 per hundredweight range. A lot of industry chatters suggested that recent auctions, there's been fewer lays going to the feedlots, which means that ranchers would be retaining those to get some additional replacements. Now, that's kind of an obvious trend given the pricing of these cattle that would start to take place. And to what extent is still kind of yet to be seen. Overall, inventories seem relatively tight there, but it's still obviously become a large revenue source for dairy producers to watch and kind of use there. So yeah, definitely something we're monitoring closely. And then if we look at some of the other outside markets, so the stock market as of earlier this week has pushed to an all-time high with the S&P surpassing the 5,700 level. Also, gold has reached an all-time high. So I think there's a lot of interesting activity going out there with investors ahead of the election. There's also this sentiment out there that the Fed is eventually going to have to drop rates at a certain point, which I think a lot of people are putting maybe the cart before the horse here a little bit. But there seems to be some excitement to put some money back in play in these markets.
So, Curtis, a lot of uncertainty out there, a lot of unpredictable things going on throughout the different commodities and the stock market at large as well. But when you look at the things that you can control on your farm, in your farming business, there are some things that you can take charge of. And that kind of leads into how you help producers with managing their margin. So why don't you take a moment and just dig into that a little bit of why now is such an important time to make sure that you're looking at that margin and the difference that it can make, especially in uncertain times.
Yeah, certainly. I think one of the biggest mistakes that I tend to run into is I see producers that are not tracking their margins per se until we get into a situation where things are negative and they're looking for a silver bullet or a solution that's going to get them out of that sticky situation. The reason why I think right now is the time to be starting to measure and size up your margin opportunity is because things are improving. We've seen the decline in feed costs here over the last couple of months. We've seen milk prices hold on to some pretty steady levels. And ultimately, being able to measure that and understand the potential financial impact of what those price shifts may have on your bottom line is what running the business is all about. Now, there is some difficulty with that. So I think I have kind of posed people with the question a lot of how do you go about measuring that margin? And it falls into a couple of different categories. I think obviously the most important piece of that is for dairy farms, it's the milk revenue. Every producer you talk to will know his production, his components, every other stat about his herd. But unfortunately, there's a lot of existing solutions out there that try to convert some of those numbers into a milk price or a revenue number that take a lot of shortcuts because they just kind of want to get to an easier answer. So we've seen a lot of things out there that are either taking class 3 and class 4 and adding over a fixed basis overage. Some people use energy corrected milk to multiply by a class 3 or class 4 solution. But what ultimately we're shipping as dairy farmers is components, and everyone's priced off those components. Even if you're being paid off of a cheese yield, that cheese yield is ultimately driven by your component production. So I think it's important for us to understand everybody's way that their milk is being priced a little bit. So we've actually developed some tools at HighGround to help producers with this and help the industry a little bit understand this a little bit better. Based on where your dairy is located, your processor, and a few other factors, we can get you to a very close answer on some of these things so that you understand the value of your milk sort of at the market price. There are some factors that are a little bit outside of our control that kind of play into this a little bit of how the milk is ultimately priced that may throw off the calculations. But ultimately, by making some assumptions and some different changes to our model, we've been able to arrive at what we think is one of the most accurate answers out there for producers when looking to get a correct valuation for their milk revenue. Another category that I think everybody understands is a concern, but we do see people tend to fall short when it comes to managing these things, is feed costs. So it goes without saying that feed is the largest cost center on any dairy farm. I think producers do spend a lot of time trying to really understand their usage, inventory, and costs, but being able to really break that down into a granular level to understand what's coming from a pricing perspective instead of being reactive on those things is very important. So being able to divide out what feeds are you growing versus what feeds are you purchasing? What does it cost to grow those feeds? When are they being fed out? When you're purchasing feeds, are those feeds correlated to a futures contract or are they not? Can we plug in a formula and create a accurate price projection for your feed cost from a total usage standpoint? And we've had a lot of success with pulling those numbers together and helping people understand where they're at from a feed cost perspective. There's a lot of tools out there that also help with this. A lot of nutritionists are also excellent advisors when it comes to understanding the financial impact of feeding dairy cows, obviously. But this is something in a very important category to understand. And then if we also look at herd replacement costs, so in a time like right now where you have replacement heifers knocking on the door of $3,000 or even higher, we've kind of been advising people to say, hey, it may be better to have a few extra replacements around and then be able to adapt to situations where something happens and you have some involuntary culling and you have to kind of fill in that gap a little bit. But I think it's also enticing right now, given the value of these beef on dairy animals, for people to kind of pull that lever as much as they can to maximize revenue for the farm as well. So I think understanding those cow flows, tracking those things accurately, and then making sure for the animals that you do ultimately breed for beef on dairy purposes, that you do have a strategy in place for how to capture some of the value out there, whether that's using feeder cattle futures or the LRP program. There are tools in place to essentially look at the future value of those animals even before they're born. And that's something that I think is important, that given how much of a significant piece of the overall operational revenue that's become, we need to be taking that into account. And then lastly, just kind of looking at understanding your non-feed or herd replacement costs. So everything that goes into labor, overhead, all those things. These are things that don't necessarily fluctuate quite as much month to month or year to year. Of course, things like labor tend to get more expensive seemingly every year, but we need to make sure we're plugging these into the calculation to understand the overall profitability of the farm and understanding that sort of margin model for every dairy. And every dairy is going to be different on how they approach things. There's family dynamics that play it well, but I think having a accurate measuring device to understand where you're at helps unstick a lot of these conversations on what to do next.
And so going along with that, Curtis, what have you seen work for people when it comes to being able to really understand that margin and measure it? Do you have some tips that you can offer to our listener today on doing that?
The use of technology is definitely a key thing. There are existing excellent solutions that are out there in the industry when it comes to monitoring and recording all this data that goes into these things. Ultimately, all those solutions, you're going to get out of them what are put into them. So if the data going into those solutions is not the best quality, well, then the insights or the things being fed out of them are also not going to be the best quality. So I think working with the teams of people that have those solutions and can help you organize those things on your dairy is very important. I also think it's important to check on these things regularly. I think a lot of dairy farmers that we talk to, when asked about their financial situation and where things are at, they typically only really get a check of how they've performed, was it twice a year when they check in with their accountant and do their books and kind of review things. This is something we need to be monitoring and understanding the financial impact of decisions that we're making day in and day out and every week of what they're going to have on the bottom line of the overall operation. So I think being able to understand all those things helps make those decisions. It helps become kind of a guiding force. And ultimately, I think when we're talking about these things, what we're kind of identifying are all these responsibilities that need to take place within the business operation itself. And in a lot of cases, when as an individual farmer or something like that, you can't handle every responsibility yourself, it does become overwhelming. But I think what's important is rather than abdicating those responsibilities and just saying, I'm just not going to deal with that, delegate that. There are people out there that can help you manage your feed inventories, understand where things are at, help with understanding your cow flow on your dairy farm. There are lots of smart people that can solve all these problems for you. And being able to build that trust and establish those relationships with those people so that they can help you and you can delegate those responsibilities rather than abdicate them is very important.
And when you talk about delegating those responsibilities and tapping into industry experts that have in-depth knowledge and that spend their time specializing in something, in this case, margin and risk management, that's something that you do, right?
So at HighGround, we do offer a margin management advisory service where we come in and we help analyze all these numbers and kind of help you ultimately measure that margin to understand where you're at and understand what actions can take place. And like I was saying earlier, I think this is an excellent time to explore those types of solutions because right now, in a lot of cases with clients that we're talking to, the margin that we're measuring is one that looks quite nice. And from there, the conversations are quite easy. It's not that we have to go crazy and put a bunch of positions on, but it's nice for us to know where we're at right now. And it kind of creates our roadmap of how are we going to handle the next 12 months here, given the margin opportunities that lay in front of us.
So that's one of the opportunities that you're able to provide is looking at where things may be going, helping to create a plan for dairy producers and their businesses to move forward and to take advantage of the ups and ride out the downs so that a year from now, they can be better than they were today. Better from a financial standpoint, better from a stability standpoint. And again, profitable and sustainable dairies. That's what you do. That's your business at HighGround Dairy.
Absolutely.
Excellent. Well, Curtis, thank you so much for jumping on with us today to provide a market update for the month of July as we've touched on the different aspects of the dairy market, but also getting into the crop markets and other commodities as well, and the tips that you offered on margin management and why now is the time to really take a good hard look at what you're doing and what the opportunities are. And for those listeners that are interested in learning a little bit more about some of the margin management advisory offered by HighGround Dairy, they can reach out to you, Curtis, and they can also find links in our show notes for those resources. You just heard from Curtis Bosma with HighGround Dairy. This episode is brought to you by HighGround Dairy, which provides global dairy market intelligence, insurance services, futures and options brokerage, and advisory programs to a diverse range of dairy market participants throughout the supply chain. And if you'd like to get a hold of some of the resources that Curtis mentioned today, make sure to check our links in the show notes. I'm Peggy Coffeen, and thank you for listening to this Uplevel Dairy Podcast.